Your market news now. Global stocks edged higher and bond prices are lower as markets continue to retrace last week's moves to safe haven assets. Aside from geopolitics, traders are focused on comments from a slew of Federal Reserve speakers this week and on corporate results. Meanwhile, top of mind for investors are quarterly results from Goldman Sachs and Bank of America after JP Morgan, Wells Fargo and Citigroup solidly beat expectations last Friday. Bank of America's results exceeded analyst expectations, pushing the stock up in pre-market trading in the US. And Tesla and Netflix are also due to release numbers this week. Meanwhile, oil prices have steadied after sliding more than $1 amid hope that the US would ease sanctions on producer Venezuela. To give us perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, given the many cross currents that are out there, I'm curious though, how are you advising your clients when you're hearing all of this noise and some of the numbers on the screen are pointing red?
You know, we try as much to be cautious, as you are saying, because now lately everything is driven by headlines. We've seen now lately that there have been some step up when it comes to diplomatic efforts to try to make sure that they try to calm the nerves when it comes to the Middle East. And we are saying as long as the war remains localized, then we'll continue to focus on the interest rate outlook, meaning we have to check out those comments coming out of the Fed officials, and also we'll continue to look into corporate earnings, how they look like, and also tomorrow as well we'll be zooming into the Chinese Q3 GDP.
So let's talk about these interest rates, picture that we've been analyzing for months now. What is priced in here for the inflation side?
You know, so far the inflation numbers that we've been seeing, it shows that inflation remains elevated. But the fact that we had comments to say that we still have another interest rate hike that might still be realized this year, will continue to be on the outlook. But so far, the guys said everything would be data dependent. But the data so far is not pointing to another interest rate increase. But we know for sure that we cannot just rely on one data set. So we'll continue to monitor all that. But the long and short is that markets think that come November, December, probably the US might not have to increase. Probably maybe they might give us that interest rate hike sometime next year, early next year. Why? Because we see of this current Middle East conflict, inflation is now on the upside because of the high oil prices that we've been seeing now lately.
I mentioned in my intro that, analysts are focusing on U.S. earnings season, and we had the banks kick us off. And the common theme there since Friday has been the growth in net interest income. But apart from what we're seeing with the banks, what is the narrative going into this third quarter's earnings season?
So far, we've been seeing that the U.S. economy continues to be resilient. We've seen the numbers that came out of Johnson & Johnson managed to beat market expectations. And yes, you are right, with the banks, a different story. And as you mentioned, with Goldman Sachs, we're still trying to see what's going to be happening to that wealth management unit of theirs. And they might not do as good as the other ones that we've seen since Friday. But as it is now, data coming out of the U.S., the labor markets, whatever you name it, we can see some resilience. The problem is up until when?
So the one thing we've seen was the volatility in treasury markets last week and the week before. Have you figured out why we're not seeing that kind of volatility in the equity side?
Yes, because with the bonds market, number one, other than the geopolitical risk, we've got issues about supply that we might have an oversupply. We've got issues about deficits as well when it comes to government deficits, because we've seen that the economy is not growing that great. They might definitely not be able to collect much revenue compared to their spending. So issues like that continue to affect. And then obviously other issues which also affects equities, the likes of elevated interest rates, the likes of high inflation. But I think with them, other than that, we've got the supply deficit, the supply issues and also the deficit issues. And remember, with them, when we price or we have an outlook when it comes to interest rate, they tend to be more volatile compared to equities themselves.
Tomorrow, Pick n Pay is releasing their results, and Sean Summers is going to be answering a lot of analyst questions and as well as from the financial media. But when those numbers come out, what will you be looking out for?
I think most of the stuff has been priced. As we've seen their update, we know that their profits, they expect that to grow by more than 100%. We know that they expect to have high diesel cost of over 300 million, and we know that the lower LSM continues to do okay, meaning we expect the likes of Boxer, Liquor, and also Pick n Pay clothing to at least try to do well. But the biggest sector, which is the SA, Pick n Pay SA, will continue to struggle. So almost most of the things have been priced in because of the trading statement that they've released. I think what will be more of interest is the way forward, and they're going to continue with implementing the strategy that they've been trying to implement so far, and how far are they with that implementation.
Before I let you go, just quickly, apart from the data coming out of China and Pick n Pay, anything else you're paying attention to for the remainder of the week?
Yes, we'll be looking into our local CPI tomorrow and also our retail numbers. And we know that most probably our CPI will show that it's gone up because of the high petrol prices that we've just seen, and also because of the weaker rand. And also when it comes to our retails, we know that they've been decreasing by almost 1.8%. We don't expect to see any improvement because the cost of living is still high when it comes to SA consumers.
Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers. And just looking at the oil price, just dipping below $90 a barrel. 89.76 is where we're standing. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.